Good morning. Welcome to IG's early morning call. It's Friday, the 14th of April. Let's take a look at the headlines as we go into the start of today's European session. We're leading on the US dollar, now falling to a one-year low. We've got near 13-month highs for the euro dollar trade, and all this has seen gold rise to within $30 of a new all-time record high. Meanwhile, it's the beginning of the meat of the first quarter US earnings season today. We got some really big names coming through in the banking sector, also United Health on the sheet this morning, some of the all-session stocks to watch today before the US markets open. And that rally in coffee continues. Dry conditions have been hitting the outlook. We've got supply constraints, which is impacting on that upward movement on the price of coffee. Let's take a look at volatility. Yesterday we saw, we'll just see this in just a minute, a new all-time record high in the French markets, 15-month highs in the German DAX, gains across the US markets yesterday, Wall Street up across the board, FTSE 100 gaining. And as a result of that, or rather part of this trade, is this drop in the volatility markets. And we've seen a drop now down below this rising line of support. It had previously been on three touches. From the lows we saw back on the 2nd of February, and then again, beginning of March, you saw there's two touches there. So in the last couple of days, it's been down below there, but yesterday closing substantially below that with a fairly strong candle on the way down, and we're consolidating at yesterday's low, still above 20.26, but at the moment at least we are seeing further gains, which has seen these risk assets continue to rise. FTSE 100 currently trading at levels not seen since the 10th of March. Big strong gains yesterday. Closing not too far away from the highs on the 24-hour markets. We're building on that at the moment, looking for a slightly stronger start to the European trading day for the London markets in just a few moments' time. Some interesting stocks to watch this morning, not on the FTSE 100, but the FTSE 250. I'll go through a couple of those in just a few moments' time. German markets, new 15-month highs yesterday, intraday. 2 days ago, intraday, closing at a new 15-month high yesterday, and we're building on that at the moment. So you can see these levels going back to January 2022, and we're building on the gains that we saw in yesterday's session. You can see the strong gains taking us past that previous high that we had seen. In fact, the high was there on the 4th of April. The 12th of April this week was a new intraday 15-month high, but closing yesterday at new 15-month levels. French markets, record high yesterday, record high today as well on the 24-hour markets, pushing again, this time up to 75.04, 33.48% up from the October lows. Who'd have thought back in October we'd be looking at these sort of gains of these equity markets? It has been an absolutely stunning ride for those that have been long on these markets. Let's take a look at what's been happening overnight in the Asia-Pacific markets. China's top banks planning $5.8 billion of bond sales to plug a capital hole, according to the Bloomberg reporting this morning, which means that the Chinese markets have been in amongst the poorest performing. You can see there the Hang Seng stock index. It had been down earlier, so it has managed to eke out a gain. We still have a little bit of the cash session to go still today, but the Nikkei up almost 1.2%, closing out another strong week. ASX 200 also enjoying a lift. I want to show you this chart. This is the China A50. Now, this is the FTSE-owned Chinese listed companies that the FTSE's put together. And in fact, I'm going to be following this into next week because this is going to be my risk event for the week to watch out for next week. This is the trade around the risk event. I'll go into that a little bit later on in a separate video, but the bottom line is we've got Chinese GDP out next week. Now, we've been looking at a fairly disappointing exit from COVID recently, but the IMF was fairly upbeat on the outlook for Chinese GDP. So I'm going to be taking a look at this as a risk event for next week. I think it's Tuesday morning we get the Chinese GDP data out. You can see in today's session, we are down for these big top 50 Chinese stocks that trade on this China A50 index. And as I said, with the authorities allowing the banks to open the pipeline to get these bond sales up and running to the tune of $5.8 billion, this is to plug a capital hole in the financial system in China. Let's take a look at Wall Street late last night. Really, really good day across the board, especially for those tech stocks, up almost 2% for the NASDAQ. And in fact, this is where I want to start on the NASDAQ chart to show you that we're not too far away from the highs that took us up 23.9% from the October lows, from the January 2023 lows, I beg your pardon, to the highs that we saw on Tuesday last week. Not too far away again from knocking on the door of that level. You can see very strong day yesterday, and in fact, looking at these candles, I think it's the strongest day that we've seen in a month or two. At 13,094, the Nasdaq is continuing to hold the point we were at the close last night. In other words, not much trade overall. I think really the US market's really waiting for the numbers out today from JPMorgan Chase, from Citigroup, from Wells Fargo, also United Health, all session stocks on the IG platform. And I'll go through some of those in just a few moments' time. But in amongst the news that we've seen has been this move in what's happening with the dollar. Now, this is the dollar basket. It fell further yesterday, and you can see actually this morning, we've now dipped below this line of support that was established with that low candle there back on the 2nd of February at 100.50. And we're now trading at 100.44. Which is the lowest point we've got since the 21st of April. You remember the US CPI data out on Wednesday. Yesterday, US producer prices fell for March, dropping by the widest margin, actually, since April 2020. And initial jobless claims rising more than expected. Now, this dollar weakness that we've got, as we always talk about, the way to trade this is by a more liquid chart, and that is this chart here for the euro dollar. Now you've got a bit more clarity here. You can see that the candle close was beyond the highs that we had seen intraday back on the 2nd of February, and in today's session we've notched up another new. This is a near 13-month high. We're now at levels in this market not seen since the 1st of April last year. So you can see that we're just over a 1-month high for the euro dollar trade. I was talking about this yesterday and talking about where to put the stop loss below the 109 level. Well, I'm going to bring the stop loss up now to below the 110. Lock in the profits that we've got this week and on expectations that this trend is likely to continue. Where it goes, well, that all depends, of course, on what happens in the future. And we've not got an enormous amount of data, I don't think, necessarily next week to hang things on. But we're going to continue to monitor the news flow around the Fed's intentions on interest rates. We've just seen a recent report out from, I think it was Morgan Stanley, could have been Goldman Sachs actually, talking about this move up in European EU interest rates. The ECB is expected to raise interest rates again. The big debate is whether it's going to be 25 basis points or 50 basis points. But I think whichever way you cut it, it's certainly looking like we've got a more hawkish attitude with the European Central Bank than we're getting from the Fed. That's another reason to sell this dollar down against the whole basket of currencies. But the way this is all following through is that we've got this rise in the price of gold. And we are now at 2043. And the intraday has been a little bit higher than where we are at the moment. But the bottom line is we're just $30 away now from an all-time record high on the price of gold. And when the price of gold goes up, of course, profits of gold companies goes up. And that's a levered way to improve your benefit from buying into gold, is buying companies rather than bullion. And of course, if you hold anything other than, if you're looking at gold itself, if you're holding anything other than sovereigns or currencies, you have to pay capital gains on your benefit. So holding currencies is the better way of doing it, or shares is even better if you can get these companies that are maximizing out on their profits because of this rise in the price of gold that we've seen. And it has been a stunning week for the price of gold on this US stats business and what's been happening with the US dollar. Talking about stats, in the US today, the market awaiting a couple of economic indicators this afternoon, starting with retail sales at 1:30 p.m., which for me is the biggest number out today. Economists anticipate the index to fall by 0.4% in March, month on month. It'll be followed by release date of 2:15 this afternoon with industrial production, forecast to rise 0.2% in March compared to February, and the Michigan consumer sentiment expected to remain at a measure of 62 in April. And I think really that is going to be not necessarily going to be a pivotal moment, I think, necessarily for today's trade, but it'll certainly be interesting to watch. For my money, it's the retail sales at 1:30 p.m. we should be watching. Let's talk about what's happening on the corporate world. A little bit early this morning, we was talking about some of the stocks to watch today. I was looking for Hayes. I'll cover that in just a minute. Got some breaking news there coming through from Superdry, which does not look particularly good. I want to show you the share price chart for Superdry. You'll remember we had that record high in the stock back in May 2021, all up at 492. Here we are now at 106.2. Let's focus in on this today because retail sales continue to show good like-for-like growth according to the headline this morning, but it's at a slower rate than anticipated. And that for me is a negative at the share price start today. As I say, we'll open at 106.2. We've got support down here at the 92 pence level, which was the Friday 16th of December low that we had. Full year 2023 revenue now expected in the range of 615 to 635 million. That's more than we saw last year at 609, but less than the previous estimates. The company says, given the challenging trading environment, the board has taken the decision to withdraw the existing profit guidance of broadly break even for fiscal 2023. This for me is a red flag for the session today. Capital raising options as well being considered, including a potential equity raise of up to 20% which has been fully supported by Julian Dunkerton. He's the founder and chief executive of the company. But I don't like the look or sound or feel of this report this morning from Superdry. I'm going to go into today's trade with a stop just above the 110 level, with a view to taking the stock lower at 106. I'm keeping my stop loss in nice and close. It means that if there is something I've missed in this report, which might give an upside surprise to the share price, it means I get stopped out and I don't lose too much money. But my price target is this low down here at 92.2. So Superdry, certainly one of the stocks to watch at the start of today's session. Let's stay on the charts because I wanted to bring up another chart, as I promised, that of Hayes, which I now don't seem to be able to find. Let me just quickly dial in HAS into my pro real-time charts here, and it brings up the Hayes chart, 4 days in rows of gains. Pretty good numbers out this morning for the first quarter trading statement. Record fees up 5% on this time last year. Strong growth in temporary appointments up 11%, but permanent placements down 2% as placement volumes have been reduced through the quarter, driven by reduced client and candidate confidence. This, I think, is significant for the outlook for the long term for the permanent staff. People just don't want to hire permanent staff. They'd rather go for temporary staff just to see them through this next couple of quarters or so to check to find out just if the economies do go into recession. If they do go into recession, how deep is it going to be? Where's it going to be affecting individual companies? So these recruitment companies are really interesting to watch at the moment. But permanent staff down 2%. Record fees in Germany. The fees in the UK and Ireland down 2%. America's down 15% in terms of overall fees. So that's a real concern. The company says we expect second half of fiscal 2023 operating profit and conversion rates modestly above last year's figures, assuming overall activity levels remain stable in the fourth quarter. Let's take a look at some of the stocks worth watching today in the US markets. It's a big day for US banks. Got JPMorgan Chase out, the largest US bank by assets, is scheduled to release its first quarter earnings before the US market opens today. Market expects the bank to post earnings of $3.41 per share, an increase of around about 24% on the same quarter this time last year. Revenues forecast to rise 14% to 36.13 billion. Now, these are analyst expectations, and they're fairly robust given the backdrop. But in rising interest rates have really been a boon for some of these banking stocks. You can see we will open all sessions on the IG platform ahead of these numbers at $128.94. But as ever, forecasting for the month to come will be key as the economy is expected to slow later this year. Investors will be particularly focused on the amount banks will set aside to cover potential loan losses. In the case of JP Morgan, analysts anticipating a provision for credit losses in the region of $2.25 billion. Flow of deposits will also be closely watched with the collapse of Silicon Valley Bank and Signature Bank. And you can see here this drop that we've seen recently in the shares here of JP Morgan and reflected across the banking sector have really been all about concerns about the outlook for banks, which is why this monthly or quarterly report is going to be so critical. We saw deposits leaving smaller regional banks for larger banks such as JP Morgan. But since the same banks agreed to rescue First Republic Bank, concerns appeared on whether the crisis hit regional banks has spread to the broader banking system. These sort of questions will be answered by the release of numbers out today from JP Morgan and also Citigroup. Expectations there, earnings per share, $1.70 on revenues at just over $20 billion. I want to show you the Citigroup share price as well. Like JPMorgan Chase, this is trading all sessions on the IG platform, and it's trading right in the middle of this band between the 40.50 and the 54.55 level. We're opening all sessions at 9 o'clock this morning, UK time, at 47.51. Watch out for this bank as well when it reports earnings before the bell today. And more domestically orientated is Wells Fargo, forecast for its earnings today at $1.12 per share on revenues of $20.12 billion. And because of this sort of twist towards the consumer in the US, it'll be more interesting to see just how the consumer is faring as opposed to the international banks, which rely more on the capital markets like Citigroup and JPMorgan Chase. Wells Fargo will open today, all sessions on the IG platform at 39.35. Now let's move on to take a look at one other stock worth watching today, and it is another really big stock, very high volumes, very interesting to see what goes on today at United Health. First quarter numbers, earnings per share $6.17 and revenues of $89.71 billion. United Health has recently seen all-time record highs in the stock at $563.12. Which was the high that we saw back in November last year. Since then, there has been this little bit of a move back. But look at the rally that we've seen in the last couple of weeks or so, since the 30th of March. It has been an absolutely stunning start to the April trading. Open all sessions on the IG platform this morning at $526.80. And we're looking for these earnings, like the banks, before the US gets underway a little bit later on. Staying on the chart, just wanted to quickly update you as well on what's happening at Boeing. In the news late yesterday, you can see actually this stock was affected late in the session yesterday, all the way down at $202.39. Watching out again for the opening on the all sessions market today at 9 o'clock. 4.6% down yesterday after the company announced late last night it's halting some 737 deliveries because of supply problems. We don't know exactly what's going on there. It seems like there's some quality issues that's going on, according to a Bloomberg headline. But we'll have to see how things develop. Watching out for Boeing stock a little bit later on. That's a ticker BA, by the way, if you're looking out for that in the center of that chart there. Boeing watching all sessions on the IG platform. Let's take a look at what's been happening with the oil price. I want to quickly wind the clock back to last Friday to take a look at what went on last week to remind ourselves the Baker Hughes rig count declined by 4 to 751. The number of oil rigs in operation fell from 592 to 590, which was a surprise given the fact that we saw just prior to that, at the beginning of the month, that we saw that move by the OPEC nations, OPEC plus nations, to cut supply further. That being said, of course, it does take a little bit of time, a couple of days or so, to turn these wells on and off. It'd be interesting to see if that reverses, the reduction in wells last week reverses this week with an opportunity for some of these nodding donkey type wells, which is what these rigs really are, to come back online because of this rise in the price, taking an opportunity to sell oil into a more robust market. This is Brent crude. In the last few days, we've seen a high not seen since January 2023. But if you look at what's happening with US crude, that's been at levels not seen there since November last year. So highs for the year this year. We're currently trading just below the recent highs that we've seen for the price of oil. Now, I've been talking a lot about what's been happening in other areas of the market because of this fall in the dollar price, and it's seen other areas of the market benefit, such as base metals, copper, zinc, aluminium, nickel. They're all moving higher. I want to show you this copper chart today. We've got an entire candle today back up above the 9,000 level. We haven't seen a full candle above there since this area down here since the middle of February this year. So this little bit of a rally is well underway. If you're long at 93, which is where we're trading at the moment, your stock goes below the 9,000 level, possibly with a view to taking this further up. There's a couple of things happening here. First of all is that dollar trade, which is helping the price in dollars of some of these base metals. But the other thing is the relatively bullish outlook for growth in the Chinese economy. Got China GDP out next week. As I said, I'll be using that as my springboard for looking at the risk event for next week. And I think if you do get anything suggesting that China is emerging a little bit stronger, then I think this is another reason to potentially buy into the price of coffee. Of copper. I was talking about coffee because it's risen to a record high. Just want to show you what's happening here with coffee Robusta. The rally continues. Traders expressing concerns about whether conditions in Vietnam, which is the world's top Robusta producer, will continue. The market so far is supported by tight supplies, and there are now concerns that dry conditions in Vietnam could dent the outlook for the 2023-2024 crop. It takes a long while, of course, to bring crops on. As for Arabica, now this is Robusta I've got here. Arabica is the other form of coffee that we're looking at in the market. It's up, but not nearly as robustly, if you forgive the pun on the word. Robusta coffee at a record high, but Arabica, whilst it's up, it is only at levels there not seen since October 2022. Brazil is a top Arabica producer. Price is supported by two factors: slow exports and the Brazilian real, which has risen in recent weeks. And I'll show you this. This is the emerging markets USD BRL trade, and we've got this line which I've drawn on here, which I think is now a new line to watch to see how far down the dollar goes. Much of this drop is, of course, the dollar's performance overall, but the Brazilian real is up against other currencies as well, such as the Japanese yen, just to give you an illustration about how strong the Brazilian real is at the moment, which is helping that position on Arabica. That's it. We hope we've given you an insight into how the European markets are likely to open today. Ahead of the US earnings season, starting with those US banks, we're looking for gains across the board in the London, German and French markets, and new record highs again on the French CAC 40 as of the close last night, and ticking higher again in the 24-hour markets as money continues to go in to equities. We're back at 10:30 with Charting the Markets. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.